Okay, great. Hello and good afternoon to everyone. Once again, thank you for joining. Welcome to Atma Webinars. I'm Vaishali and I'm a senior consultant at Atma. Atma is an accelerator that supports NGOs to become bigger, better, stronger by capacity building, as most of you know. We do that through creating systems and processes to solve organizational development issues. We started our journey in 2007 and since have supported many organizations in this journey of excellence. With respect to that, the Atma Webinar is a curated platform that started in 2017, where speakers share their practical experiences that could benefit other NGOs. And the topics are very wide-ranging. We covered human resource to program management, finance policies, and any other pressing topics that affect the sector as a whole. You can find all our previous webinars on our YouTube channel, including this one later. So for today's webinar, right, I know that we in the sector are already working to solve some extremely complex social problems. And on top of that, we have legal financial compliances that add to our stress, to be very honest. So thankfully, we have people like Ravi and Aditya who are there to sort us out. And today's webinar is technical, it's information heavy. So hope you are all ready with your tea, coffee, and whatever else you need to pay attention. And we're very grateful to the speakers today for doing this. And do follow Arya's blog where they regularly post very useful information for NGOs. And I would like to introduce both our speakers today. Just a second, I'll start with, okay. So welcome Aditya. And Aditya Bhatt is an advocate. He has more than a decade of experience in assisting domestic and international charities from diverse sectors and sizes. He practices on income tax, legal and regulatory aspects of charities law. He provides advisory structuring, compliance assistance and litigation support to charities before all fora. So welcome Ravi, welcome Aditya, and thank you so much.
Thank you.
And we have, of course, we have Ravi, who many of you will know. Ravi Bagaria is the co-founder at Arya CFO Services and one of the sector's foremost consultants on income tax, FCRA, finance, and related issues for nonprofits. He has more than a decade of experience in the sector and believes in a hands-on approach when solving practical issues for the sector. Arya's clientele includes Umeed, Will Grow, Online Giving Foundation, Bhumi, Indus Action, Quest Alliance, and many others. He's a chartered accountant by profession and a photographer by passion. So welcome, Ravi, and thank you so much for joining.
Thank you. Thanks for having us.
Yes. And before we start, just 2 points. All the questions that have been shared, most of the questions that shared in the registration form have been incorporated into the presentation today. At the same time, any questions that you have, to not break the flow, we'll take them all at the end, but do keep putting them in the chat. I'll be taking a note of those and we'll pick it up when the speakers can. Another thing is what I already mentioned, that both Ravi and Aditya speak Hindi, but for the sake of the larger audience who don't speak Hindi, we will keep it in English. But feel free to ask your questions in Hindi. And as Atma, we'll also try to translate important points or clarifications needed in the chat box. Great. So Aditya and Ravi, over to you. And yes, thank you so much.
Thank you. Thanks, Vaishali, for the introduction and setting the context. And welcome to everybody. We have a packed room today. I can see about 40 plus participants. I'm assuming more will be joining as we continue. So very quickly, I will sort of deep dive in and why we are here today. We are discussing cancellation of income tax registration for charities. This is a very recent amendment. When I say recent, I don't mean like in this financial year, but this has been here for like more than a year now. But why we're discussing it now is that we are slowly starting to see the repercussions of this. And, this is now beyond just sort of law, and now practically we're seeing the implications of this. Aditya, you want to move to the next slide? So why we felt the need today is, one is that recently there have been, sorry, what we will be talking about is, this is the brief things that we'll cover. We'll quickly go over sort of why we feel the need, what our goal is from today's presentation. We will also then look at what the background of the existing law is, what is the need for the registration, what is the history, what are the new amendments that have come in, from 2022 onwards. Aditya will then sort of cover the cases. When I say cases, the situations and the sort of the consequences of the cancellation. What are the do's and don'ts for each of those sort of situations to keep in mind? And from an overall perspective, what are the general good to haves and good points for you to keep in mind? And we'll sort of close with a Q&A at the end. For a topic like this, we have like about 1.5 hour, but sometimes this is also very less. We'll try to be as quick as we can, and hence we'll try to have more time for Q&A at the end, because I'm sure that a lot of you will have more questions at the end. Aditya, you want to move to the next slide? Yeah. What we sort of want to achieve today and why we felt this is important is, generally we see that charities usually end up talking about, this whole dilemma that constantly we keep hearing people come to us and ask questions on is, oh, can I accept receipts more than 20%? Am I a business or no? Or even a hybrid structure, like can we have a for-profit and a not-for-profit model, etc. All these are issues, yes, for sure. But there are other more important and aspects that sort of have graver repercussions if sort of you haven't looked into it, and that is the cancellation bit that we will discuss today. The idea of when you're looking at business and hybrid structures is generally for that financial year, right? This is something that you have a chance to revisit every year. But when it comes to cancellation, if that happens, you may end up losing this retrospectively and never be able to reapply again. So this is very important and why we felt the need that people should know about this. Also, this is no longer just something that changed back in 2022. Very recently, we read a couple of articles that were published, and names like Oxfam India, Care India were sort of involved, where cancellation was already, cancellation of the registration has already happened. And the reason that was stated in these articles was non-alignment of NGOs activity with its objects. And we'll see as we move ahead what that means and how that affects everybody. So in all, what that looks like is that the government is moving towards sort of making things a little tighter and invoking the power of cancellation. So what our goal today is going to be is that we're going to look at sort of the overall law, help you understand from a very bird's eye view perspective what the law is, so that you can then keep this in the back of your mind. And when you are taking decisions, look at, oh yeah, this may be a possibility, and then go into further evaluation. It'll help you mitigate, your exposures that, will come forward. We've tried to make this as concise as possible. However, what we want to do is the PPT might come across as something which has a lot of words and a lot of phrases, a lot of looks like a lot of points. But we would eventually want you to also refer to this PPT as a resource. So when you recall, oh, there was this point that was discussed, you could actually come back to the PPT and use it. And the last, before I move ahead, one other thing is that the law was very recently amendment, that is, from 1st April 22. So there are not many case laws and interpretations or well settled, ways of looking at the law, how courts would sort of have it. There are a lot of aspects that are not absolutely clear, but we will try to address it as much as possible. Also, finally, this is not the webinar is not a substitute for any legal advice. If you do sort of have queries that come up in practical scenarios that you are executing, do please reach out to your consultants and lawyers who will help you with this. This is applicable also to charities who are sort of registered under 1023C, not just organizations that have um, registration under 12AP. With this, let's move ahead to the background of the law. and what we want to do. Right? Where does it come from? So if you see, the registration is required for you to claim your exemption under Section 11. If you don't have the 12AB registration, you will not be able to claim Section 11, which is basically, how your income is exempt, whether you can, apply it towards charitable purposes, etc. or no. You will not be able to get an ATG approval if you don't have 12A um, uh, uh, registration with you. You will also not be able to the beneficiary rather will not be able to have the exemption that they have when you sort of donate any amount to them under section 56 to 10. Also, this is just, from an income tax perspective, why you need the registration. There are also other laws which require you to have a 12A registration. Otherwise, you cannot operate under those laws. So something as simple as a CSR, right? The prerequisite for you to be an implementing agency is that you have to be a nonprofit and have to have 12AB and ATG registrations. So these are the reasons why you need to have a 12AB registration, and you need to maintain it. Now, as far as the history of the law goes, what earlier happened was that prior to 2004, there was no power given to the authorities to cancel your income tax registration. So once you did have it, right, there was no power with the authorities to come and say, oh, you are doing something wrong, or these are the challenges that you have, and say that, okay, you're not able to sort of do this. Post that, in 2004, there were two powers that were added, and sort of cancellation was introduced. And since then, there was not much movement on this. But now, as you sort of see, from 2024 to now, there are like a total of, I think, 9 sort of specific violations that we will cover ahead, under which cancellation is possible. And we'll see how, sort of, as we move ahead. Aditya, if we can go to the next slide. What is the process that can be followed, right? So when it comes to these specific violations, the principal commissioner of income tax or the income tax may be notified, of these violations, or your assessing officer who is doing your assessment here on your or even, this may be like a process of random selection that the CBDT has, from a risk management perspective. They have certain criterias where they pick up at random. If your income is over a certain amount, if you have a certain amount of expenses, like, they have a lot of these criterias that, we don't come to know of. That could also be how such violations may be notified and picked up. And what happens when they get picked up is that the principal commissioner or the commissioner shall call for information and documents to satisfy themselves regarding regarding the violation, and then based on that, sort of pass an order for cancellation of the registration, or refusing to cancel. But of course, this is not without giving you an opportunity to be heard and, present your documents, etc. Now, such orders have to be passed within 6 months from the end of the quarter in which this notice was issued. Right. So, example, if the notice was given to you in the month of April, then they have till December, which is, at the most 3 plus 9, 6, a total of 9 months, to sort of process your order and say, what is the outcome of that. Now, supposing you have cancellation, what can you do? You can file an appeal with the ITAT against such a cancellation within 60 days of receiving such an order. Right. So this is the sort of the background of the law, and I will sort of hand over to Aditya to sort of take us forward into the consequences of the cancellation. And
Right.
over to you.
Hi. Good afternoon, guys. I think let me first start by apologizing. We are sorry to put you through this very intense topic, on a Thursday afternoon post-lunch session. You to blame Atma for this, not us. So but it is, I know, an intense session. We'll try to keep it as interesting or as light as possible and as light as the income tax department allows us to do. So we'll try our best there. Okay, so Ravi mentioned something about specified violations, which are essentially these situations under which they can cancel your registration. So we'll be spending a lot of time today on what these situations are and, maybe some nuances of what these situations really are. But before we get into that, we thought, let's first understand the consequences of cancellation. Because if you really see the consequence, you'll really understand how serious this situation really is. So that's the reason why we thought before we get into the specified violations, let's first talk a little bit about what are the consequences. All right. So the first consequence is the most obvious one, really, is that you are no longer going to be eligible to claim exemption under Section 11. What that really means is, I'll just simplify the entire provision. Suppose you have income of 100 rupees. Under the law, if you want to claim exemption, if you don't want to pay tax on the entire 100 rupees, you'll have to spend at least 85% of that. So at least 85 rupees towards your objects. If you do that, you are allowed to accumulate 15%, the balance amount, forever, indefinitely. If you are not able to spend 85 rupees, then Section 11 also gives you certain options where you can spend it in the immediately succeeding year by filing that relevant form, or you can spend it over a period of 5 years if you're not able to spend it in that first year. So it gives you these options. Section 11 gives you these options. So the moment your 12AB is cancelled, you will no longer be eligible for all these benefits under Section 11. That's the first implication. So really, your income will be taxed under the normal heads of income. It will not be taxed under 11. What that means is, suppose you and I today, if we sell a property, our income is taxed, say, under capital gains. If I was to receive rental income, it will go under income from house property. If somebody gives me some fees, that's my service income. It will go under income from business and profession. So if I don't have the benefit of Section 11, then my income gets taxed under these various heads of income. I will not get it as an exemption. So that's the first consequence, the most important one. I would say most, but a very, very important one. The second one is the moment they cancel your 12AB registration, your donors will no longer be entitled to claim deduction under Section 80G. You must be aware, most of you would be aware of what is this 80G section. Essentially, it gives a deduction to your donor, which he can take from his own income when he gives you a donation. So if they cancel your 12AB registration, from the date of your cancellation order, any donation that you get from the date of your cancellation order, the donor will not be entitled to an 80G deduction. I think somebody had a very specific question on this. So I hope we have kind of answered this. Otherwise, we can take it at the end. Fortunately, the law is a little clear about what happens to past donations. The donations which are made before the cancellation order, the law seems quite clear and they will be entitled to deduction for those past donations. The natural corollary is also they will withdraw your 80G. So you lose your 12AB, Section 11 exemption is gone, 80G approval is gone. Two consequences we've seen as yet. The third one is also very, very serious, especially for established charities which have been in existence for 5-10 years. So what does it say? It says they will, upon cancellation, they will levy exit tax on the market value of your assets. So, a charity has been in existence for 10 years, suppose, slowly, it has built a corpus, it has accumulated these funds. Some charities also go and purchase immovable property. So these are the assets which the charity has built over the years. If your registration is cancelled, they can levy exit tax, which is at 39% today, on the market value of these assets, not the book value. So if you have an immovable property, for example, it's not the purchase price that you put in your books, which is going to be taxed. It's the market value or stamp value. There is a There is a particular method which is prescribed in Rule 17CB, which I have quoted here. So when you look at the rule, you'll know that they've given for each category of assets, how do you value it really? That's what 17CB says. This exit tax is going to be calculated again, the assets that you have in your books on the date of cancellation order. Whatever funds you accumulate, whatever assets you have in your balance sheet on the date of the cancellation order, they will levy tax on those assets. If you dispute the cancellation, as Ravi said, if you are not happy with the cancellation order, which you will not be, you will go ahead and file an appeal to ITAT. So if you have disputed and you've gone to ITAT, this exit tax, the collection of this exit tax is postponed to after when the ITAT confirms this cancellation order. So this is like a small mercy. So you don't have to pay exit tax immediately upon cancellation of your order. It gets postponed till the time the ITAT, which is the higher authority. So you have CIT, and above that you have the ITAT. So when the ITAT confirms the order, that's when you'll have to pay the tax. So this is a very, frankly, we can do a whole session on 115 TD, this exit tax provision. It is very, very serious. All right. The fourth consequence, Ravi briefly did speak about this, is your beneficiary is entitled to an exemption because you are registered under 12AB. So what the law says is that if I were to receive any sum of money as a beneficiary from an entity registered under 12AB, then it is exempt in my hands. That is what the law says. So if my 12AB is cancelled, if the charity's 12AB is cancelled, then I get taxed. So your cancellation, your 12AB cancellation just doesn't affect you. It also affects your beneficiary. So this is again a very serious consequence to remember. Ravi also mentioned something about CSR registration. So the 12AB registration is a requirement to act as an implementing agency under CSR also. So if you lose your 12AB registration, you cannot act as a CSR partner also. The sixth consequence is a slight interpretation, really. So, see, normally, say you and I, if we get some income, we are allowed a deduction against this income only for the expenses which we've incurred to earn the income. All right. So, if I were to pay salary to my colleague for a service income that I'm getting, I will get that as a deduction. But if I want to gift something to Ravi, I can't claim that as a deduction because that gift has got nothing to do with me earning the income. It's really an application of income, to say. So it's only, so in your case, in a charity's case, you are spending money on your objects, really. But that spending, very strictly speaking, is not to earn the income. You're not earning your interest income, for example, on your FD because you're spending on your charitable objects, really. So it is only this section 11 which is giving you this right that even when you spend money on your charitable objects, that is allowed to you as a deduction. So it is a really a special benefit which section 11 is giving you. So a question does arise that if your 12AB is lost, you no longer get section 11 benefit. Can I really claim these expenses that I am incurring on my charitable objects as a deduction under law? Now, fortunately, there are certain courts in India which have held that yes, even if you don't have a 12AB registration, you can't tax me on my gross receipts, whatever, because what is taxed under law is income. And you'll have to calculate what the expenses that I've incurred. You can't tax me on my gross receipt. So fortunately, there are some courts which have held in favor of charities. There are some courts which have also held against. They said, strictly looking at the law, no. So the point here is you lose your 12AB, even your charitable expenses, the deduction is debatable. One thing is for certain, you will not get deduction for your capital expenses. Say today, if you have the benefit of section 11, you were to buy, say, immovable property, you were to buy laptops, for example, you were to buy, say, machinery, if you were, say, running a mill for training women, something of that sort, you're buying machinery. These are all capital expenses. So today, Section 11 lets you deduct the entire capital expense in the year of incurring the expense. This is again a very special benefit that Section 11 is giving. If your 12AB is not there, your 11 is not there, you will not get the capital expenditure as a deduction. You may still get the depreciation as a deduction, but not the entire capital expenditure. All right, the last important consequence, and I think this is also quite serious, is okay, suppose they cancel your registration. You say, okay, all right, they've canceled it. Now I want to go and reapply for registration under 12AB. Can I really do it? Now, the law regarding registration was first amended in 2021, but then they again recently have amended it from 1st of October 23, very, very recently. So the language of this new amendment suggests that in case of a charity which has already commenced its activities, they can apply for registration only if, and the condition is what? Only if you have not claimed exemption under Section 11 in any of your earlier years before the date of application. Now, suppose you are a slightly older charity. You've been in operation for 10 years now. In the 10th year of your operations, they cancel your registration. What that means is for 9 years, I have claimed the benefit of Section 11, isn't it? I've claimed exemption under Section 11. So a question arises that if I've claimed the benefit of exemption in the past year, how will I satisfy this condition under the amended law? So this is also a very serious consequence, and I don't know if they intended it, but the language that they've used is quite draconian, really. And this is a very serious matter again. You know, it's as if saying you make one mistake, you can never get registration again. If you can't get 12AB, you can't get 80G. Nothing is available to you then. So this is also something to be, this is debatable, but the language today is not great. All right, now let's come to these individual situations, these grounds for cancellation. And wherever possible, we'll give you certain suggestions as to how do you mitigate the exposure. I hope the caffeine has kicked in now and I have your attention. All right, the first ground and the most common ground that the tax department invokes, and what even Ravi mentioned, you know, some of those news articles talk about, is use of income for an object outside the constitution documents. Now, when basically what this means is it's quite self-explanatory, really. But if you were to use your funds for an object which is outside your the object clause, you would have noticed that your trust deed and your memorandum of association, your constitution documents, has certain has an object clause which lists your main objects for which you can really do an activity towards an activity. So if you do an activity which is outside these objects, this ground gets attracted and your registration can be cancelled. Now, the thing to remember is you are having a violation. You are violating this ground even if your use is otherwise charitable. What do I mean by that? Say you are a trust with solely educational objects, but you decide, okay, it's say COVID-19, you know, I want to now give money to for medical relief, you know, for COVID-19 relief, something of that sort. So I do that. Now that's a charitable activity. Nobody can deny that, but it is not covered by my objects. So even when your use is otherwise charitable, but if it is not covered by your objects, this ground gets attracted. So this is something to be also careful about. Just don't see whether the use is charitable or no. See whether it's covered by your objects. The next point to remember is there is no minimum threshold. Like, you know, you would standard, you will know, okay, when it comes to this whole concept of business income, okay, there is this 20% threshold. We keep hearing about that. When it comes to this cancellation ground, there is no threshold. There's no minimum threshold. So really speaking, very strictly legally, even if you spend 1,000 rupees outside your objects, this ground may get attracted. So you can't spend really a single penny outside your objects. Another interesting concept to remember is that this ground is not applicable if your use is within your object but is exceeding the powers of your trustees director as given in the constitution document. Now, again, what do I mean by this? Okay, let's go back to that same example. You have an educational trust existing solely for education. Now, it's a COVID-19 year, for example. I don't have enough income. A lot of trusts face that problem, right? During COVID-19, they did not have much current income. So they had, say, corpus donations of the past that they had, over a time generated and kept. So they decide to use this corpus. The use is towards my charitable object. It's not towards anything outside my object. But I don't have an express power to use the corpus. A lot of old trust deeds, if you see, they don't have an express power to use the corpus. They have a power to use the income of the year, but they don't have the power to use the corpus. So now I'm still going ahead and using my corpus. So yes, somebody may come and say, oh, you have exceeded the powers given to you. The trustees have exceeded the powers given to you under the trust deed. But it can't be a case. This is not a case where the tax department can allege that you're outside your object. So you must remember this difference between an object for which you're formed and the powers given to the trustees. You can't exceed the objects for this ground, really. So that's one thing to also remember. Some suggestions that we have, Ravi and I always joke and, we tell our clients the object clause that you have in your trust deed and your MOA, keep it as your desktop wallpaper or print it and keep it in front of you, Like, don't do any, always make sure whenever you're doing a new activity, just check it against your objects clause. Most of the questions also that we get, Ravi will agree with me really, is this, whether the activity is outside the objects in a lot of cases because they don't look at their object clause when they're pursuing a new activity. So this is very important. First of all, whenever you're doing a new activity or even your existing activities, please check against your object clause whether it's covered or no. Other suggestion that we would have is have wider objects. A lot of times we notice is that the MOAs and trust deeds are with due respect, they're drafted by the operational people. So they have simply put the activity which the entity is doing today or wants to do in 1 or 2 years. They naturally can't think of what the activity will do in a 10-year period. So, but in the 10th year, you would want to do something completely different, which I'm sure a lot of you face this problem. You're doing something in your 10th year which you never thought you would do in the first year, right? So it's always good to have wider objects whenever you are drafting or incorporating a new entity. Or if for some reason you were to go back and amend your objects, have like a wider, like a residuary clause, something like an object of general public utility. That will be wide enough to cover most charitable activities. So you will never have to worry about this ground at all. So that's the second suggestion we have. Third one is, especially in case of gray areas where you're not sure whether my activity is covered by objects, not covered by objects. And if you do still decide to go ahead and do the activity for some reason, have your evidence in place, like have an expert's opinion, for example, saying, okay, this is within your objects. Have resolutions in place of your trustees, of your directors, of how they think this is within the object. Is always beneficial to have these evidences in place in advance. Don't wait for litigation to start where you'll go and do this analysis. Whenever there's a gray activity, have this evidence in place in advance. All right. The second ground that we wanted to talk about is earning business income, which is not incidental to attainment of objects. So we'll just break this down. There are really 3 conditions. So there is a specified violation. It's a ground for, yeah.
Very quickly, if you don't mind, can you just go back to ground 1? I just want to add one thing.
Yeah.
So very quickly, in ground 1, I will highlight again that, even if your objects say education for children, we have seen a lot of organizations that come up and say, oh, you know what, we are now starting teacher training, right? Even something like that, please have it evaluated whether your objects really allow you to do that or not. Because we have often seen this where you will pivot, and it is possible for you to sort of go into that direction where you'll go into a TOT model. You might be working with children and then you will say, okay, अभी हमें teachers के साथ काम करना चाहिए. But ensure that your objects cover all aspects of education if you are looking at a broad spectrum, not just very specifically a particular aspect. This is again just an example I'm giving you. It could be anything like this. So and again, when you are signing MOUs or looking at documents, where you're going to reference and say, how is this in furtherance of our objects, try and link it to the exact MOA object saying in furtherance of object number so and so we are doing this activity. So it becomes abundantly clear that which activity it is highlighting. That's all that I wanted to highlight. I know we are short on time, Aditya. You can move forward.
Thanks. Yeah, that's helpful. All right. So the next ground is, okay, there is a specified violation. It's a ground for cancellation. If number one, there is a revenue generating activity. That's the first condition. Second condition is such activity, such revenue generating activity is business. And third is such business is not incidental to attainment of object. Now, before you get into each condition, first thing to remember is this ground is applicable irrespective of the nature of your object. So whether you're a religious trust, or you're a charitable trust, or for relief of poor, education, advancement of general public utility, does not matter. This ground applies to everybody. Okay, the first condition is this whole thing applies only if you have a revenue generating activity. So if you are solely dependent on, say, donations or interest income, then this ground does not come up at all. Second is, again, we can have a series of lectures on what is business, because the second condition is that such activity needs to be business. So what is business really? Okay. The Income Tax Act does define business, but it's a more or less useless definition because it's an inclusive definition. It simply says business includes trade, commerce, or something in the nature of adventure. That's it. So it doesn't really define what business means. Now, fortunately, over the years, a lot of courts have interpreted what business is. The last 50 years, there are just plenty of cases, and unfortunately, we don't have the time to get into all of them. But there is one case that I would really like you to remember is this recent decision of Supreme Court. It's a bench of three judges who have sat and interpreted a lot of things, but including what is business and what is not business. So what it has said is, if what you're charging for that revenue generating activity is at cost or nominally above cost. I'm quoting the Supreme Court right now. If it is at cost or nominally above cost, then it is not business. However, if your charges are markedly or significantly or vastly above cost, again, I'm quoting, then such activity can be regarded as business. I know the question in everybody's mind, first question is always, what is significant market? Supreme Court is not clarified at all. They have just simply made these observations because really, I understand it's a question of fact. Every activity is different. They can't say, oh, 10% is enough, because it really depends on every activity is, really different. Okay, let me explain this by way of, say, an example. Suppose my project is to train, disadvantaged women in, say, making handicraft. Now, my direct costs, say my labor cost, my material cost, etc. Plus, I have apportioned certain admin expenses, certain general expenses that I've incurred to this particular activity. Suppose the aggregate, the total is 100 rupees. Now, to fund part of this cost, I sell the product in the market at, say, 75 rupees. Okay, so at a loss. So the balance 25, I am, say, funding by way of donations or, my existing accumulated fund, something like that. This is a very good case to say there is no business because I'm not even at cost, I'm below cost. Let's say I've charged, say, 105, 108. I'm giving a very, there's nothing, this figure is not being backed by anything, but something which is nominally above cost. My cost is 100. I'm selling it at 105, 110, something of that sort. Good case to say, okay, this is just nominally above cost, this is not business. The example, there was also another, okay, let me complete this example. But I sell this at 250 rupees. 100 rupees is my cost. I sell it at 250 rupees because people are ready to pay 250 rupees for this, whatever they have manufactured. Here, I'm really risking it because now the tax department can definitely say this is a business. So I'll just give the example that the Supreme Court has given because the Supreme Court has given this example. It was in the context of there's a foundation called Gandhi Peace Foundation. There they said that if Gandhi Peace Foundation, which has the object of spreading Gandhiji's philosophy, does an exhibition where it charges a nominal fee to people and which is just over and above cost, this is not business. They've given this as an example of not business. On the other hand, the same foundation, Gandhi Peace Foundation, sells a coffee table book, which is higher price really, then that is business. So this is the example given by the Supreme Court again. Again, we can just get into this in detail, but I don't think we have the time, unfortunately. The third condition is that such business, so these conditions have to be satisfied together. The business, so it's a ground for cancellation if the business is not incidental to attainment of objects. So what is the meaning of incidental? That becomes important. Again, fortunately, the Supreme Court in New Noble's case has interpreted the meaning of the word incidental. It has said this means connected with or relating to. So if you kind of substitute it in the language of the provision, what it means is a business which is connected with or relating to attaining your objects. If you are able to show that, then it's a business incidental to your objects. Now, if we give a simple example, Ravi came up with this example. Okay, you have a school, suppose. The school is running a restaurant business. Or if I give you a more real example, a temple is running a restaurant business. Okay, it's a live real example. So how is this restaurant business connected or relating to the attainment of my object? That question comes up, and in probability the answer is no, it is not incidental. So they can cancel the registration then. On the other hand, you have a vocational institute, say, which is training people to cook or say become waiters or something like that. It's a vocational institute. Suppose that this kind of an institute has a restaurant of its own. Here you may be able to argue that this restaurant business is incidental to my objects. So these were the examples that we could think of. Again, the suggestions that we would have here is, you can just cut this problem at base if you can show you're not for business. The short way of showing that you're not for business or an activity is not business is to keep your surplus or your markup as low as possible. If you do that, there's a good case to say you're not for business. So this whole ground only doesn't come into play. Also, for all your revenue generating activities, we always suggest this. Please maintain documentation. Whether you think it's business or not, doesn't matter. For all your revenue generating activities, maintain documentation, such as your resolutions, how this activity is incidental to your object. Show, which part of my object gets fulfilled because of me doing this activity. Have these background notes in place, have these discussions in place on record somewhere. All right. The third ground is in a way related to second ground because the first three conditions are the same. There is a specified violation if there is a revenue generating activity. Such activity is business. The business, now you've established that the business is incidental to attainment of object, but you have not maintained separate books of accounts for such incidental business. Not maintaining separate books of accounts is itself a criteria for cancellation. So this is again very, very important. The purpose what courts have said why you should maintain separate books of accounts for your incidental business is so that it's very clearly ascertainable. You can very clearly see what is the surplus from such incidental business. Also, there is no overlap or confusion between what is my charitable income, what is my charitable expenses, what is my business income, what is my business expense. There is a clear bifurcation between the two. Hence, this need for separate books of accounts, as explained by certain courts. Now, what is separate books of accounts? Books of accounts has been defined under the Income Tax Act as well as the rules. Essentially, it lists the following things. Books of account means cash book, ledger, journal, copies of bills. Why we put this is to show that merely having a separate ledger account showing your revenue generating activity will not be enough. You'll have to have separate books. So separate vouchers, also separate cash book, also separate journal, also for your revenue generating activity. This is important to remember. The suggestion again, what we always tell our clients is the moment you have a revenue generating activity, whether you think it's business or not business, please maintain separate books of accounts. So tomorrow, if some court was to hold it as business, you at least have these separate books of accounts ready and maintain. So this ground doesn't come into play then, you know. So it's a low hanging fruit. If you can, I know it is additional burden on the account stuff. I understand that. But if you can maintain separate books of accounts for your revenue generating activity, it's really, really going to be helpful to you tomorrow.
Yeah, I will just very quickly add that what Aditya is trying to say, that even if you are doing everything right, it is a revenue generating activity. You are sort of, that, okay, there is a marginal surplus or a little over that, and it is incidental. You're checking all the boxes to be on the right side of the law, but you don't maintain separate books, you can still have cancellation, right? So that is the important takeaway, that separate books are absolutely vital when it comes to this, so that you can prove that you have a surplus which is manageable. There is no overlap or confusion between the other charitable activities and this business activity and so on.
Yeah. All right. So the next ground number 4, is carrying on an activity which is not genuine. If you carry on an activity which is not genuine, they can cancel your registration. The word genuine is not defined in the Income Tax Act. Some courts have interpreted genuine to mean something which is not a mere camouflage or make believe, but is a real activity. That's one. Secondly, they've said that, okay, genuine means something which is legal and not causing any type of nuisance, really. I know these are also not very clear descriptions, it's quite technical. But to give you a very, again, even Cochin Tribunal in one case has said that this genuineness is a very complicated question and you have to look at overall facts. So I understand if you're confused right now. I'll just give a simple example. It's a simplified example. But okay, say a trust is involved in bogus donations. Now, some of you may be aware that there are certain trusts. What they do is they will take donations from a particular individual, but in check. That particular individual will claim deduction under ATG. The trust will receive, say, 100 rupees from a donation. They will retain 10 rupees and 90 rupees goes back to the donor by way of cash, or they make certain other transaction, etc. So essentially it's like a racket. Now so this is again not theoretical. A lot of trusts which do it, and a case came up before Calcutta Tribunal and the matter went all the way to Supreme Court. The court observed that a trust which is involved in something like this is definitely not a genuine trust. It's doing activities which are not genuine, and it does not deserve to have a registration. So this was one example, which was a clear example of what is not genuine. Another interesting to remember is there was a similar ground in the older cancellation provisions. Ravi did mention that there were older cancellation provisions also. There they had specifically said carrying activities which are not genuine. Somehow they have either consciously or I don't know, amended the law. The new language says carrying on an activity which is not genuine. So are they trying to cover that even if you do one bogus transaction, really, or even if you do one activity which is not genuine, they can cancel your registration. So again, this has become serious. Don't do even one ingenuine activity, so to say. We've consciously not kept any do's and don'ts because this is again quite self-explanatory. Do not do fishy things. You may have a short-term benefit, but long-term, it's going to be a huge problem. The fifth ground here now is carrying on an activity which is in violation of the conditions mentioned in the registration certificate. Now, this problem, I'm sure a lot of you would have faced. The law regarding registration has been changed from 1st of April 21, where you have to go and get a re-registration. New trusts have to go and get a provisional registration. Now, all these trusts, when they are given registration certificates, they're in a particular form. It's called Form 10AC. If you go and look at your registration certificate, it'll be in Form 10AC. I think serial number 10, it contains a list of conditions subject to which the registration is being granted. When you look at your certificate, there is this list of conditions there. What this ground says is if you do anything which is in violation of those conditions, then your registration can be cancelled. Now, there is one corollary to this. For especially certificates which are issued between 1st of April 21 and 3rd of June 22. So these older certificates had a list of conditions, and some of these conditions were really absurd. I remember this one condition where it says, no assets can be transferred to anyone without CIT intimation. This was a condition given in the registration certificate. What that really means is, I can't give money to a beneficiary. I can't give 1,000 rupees to my beneficiary. I can't pay salary to my employees because that's also transferring an asset. I have to intimate CIT for everything. This is a condition which was put in the registration certificate. Absolutely absurd. So, fortunately, CBDT realized this, that these kind of conditions are being issued by CIT. So they issued a circular in 2022 on 3rd of June 2022, where they have suo moto on their own gone ahead and substituted those conditions in those old certificates. So all certificates issued between 1st of April 21 and 3rd June 2022, please go and have a look at those conditions which are given in the CBDT circular. Those are your conditions, not the ones which are actually mentioned in your registration certificate. So please go and have a look at these conditions once. Another interesting question is, can the CIT really in this clause put a condition which is contrary to the Act? Or it's not contained in the Act in any way. For example, also this is again a condition that I have seen in a registration certificate. The CIT mentioned, okay, you want to amend your trust deed, first come to me with a draft trust deed. Okay, that I want to make this amendment. I will give you prior permission first. Once I give you the permission, then only can you go to the registrar of companies or the charity commissioner and actually amend your object. So this condition is not there anywhere in the Act. The Act only requires that if I actually amend my object or if I amend my trust deed, I have to go and get a re-registration. That's what the Act provides. But it does not provide for any prior permission from CIT to amend my object. So can he really put a condition like that? The answer to in my view is quite clear. No, he can't have a condition which is contrary. Because it's based on a very basic legal premise that the form cannot override. Like a form like Form 10AC cannot override the Income Tax Act. The form cannot override the act from which it derives its power. So he cannot have a condition like that, really. Again, I think the suggestion is obvious, is to please always, just as you look at your objects clause, go and look at your conditions in this registration certificate once. Try and comply to whatever, and as much as you can, please try and comply to all these conditions. All right. The sixth ground is non-compliance with the requirements of any other law. This was originally introduced in 2019 in the older 12AA4. They have kept a similar provision in this new cancellation provision also. So what does it say? It says there is a specified violation if the charity violates requirements of any other law which was material for the purpose of achieving objects. Condition number 2, there is an order under such other law. And condition number 3, such order has not been disputed by charity or has attained finality. Now, to give you an example, say you have FCRA. You must be reading about this very often. Say your registration under FCRA is cancelled for whatever reason, they think you are against the public order or whatever it may be the reason. They've gone ahead and cancelled your FCRA registration. Now the CIT can take cognizance of such an order which was passed under the FCRA cancellation order and say that, oh, I will use this order, you violated some other law, I will use this to cancel your income tax registration also. Now the CIT is empowered to do that. The thing to remember is that the tax department cannot examine the compliance of another law. What I mean by this is that the CIT can't sit in his chair and say, you have violated FCRA, and I will now cancel your registration. For cancellation, there must be an order by that respective authority. So in FCRA, it must be an order by MHA. In Maharashtra Public Trust Act, it must be an order by the charity commissioner. He can't sit in that chair and decide whether you complied with that law or no. This is one thing to remember. The suggestion that I would have here is, again, if there is a violation under any other law like FCRA, try and challenge that order if you have sufficient ground. A lot of times what we notice is that, say you have an FCRA cancellation for some reason. Some charities are like, okay, we will do our foreign contribution activities in another entity. We'll not challenge that order. Now, if you don't challenge that order, it can affect your income tax registration. So if you have sufficient ground, please go ahead and challenge that order. All right, the next ground, and this has also been recently added from 1st of April 23, is there is a specified violation if the application for registration that you've done in Form 10A or 10B, AB, is not complete or contains false information or contains incorrect information. Now, all of you are aware, the trusts which were existing prior to 1/4/21 went ahead and got an automatic registration for 5 years. All of them had to go file this. It was a simple form, 10A, and they all got automatic registration. The CIT did not scrutinize the application, anything. They just, all of them got it. Similarly, for people who had applied for provisional registration, they go ahead, file this form 10A, and all of them within a month's time get a provisional registration. So essentially what is happening is the system is automatically giving you registration. But the tax department noticed that a lot of people are filing incorrect information and still getting registration. So they're like, now what do we do in this kind of a situation? So they introduce this ground to cover a situation where you have made some mistake in your application form, still you have got a registration. To give you an example, is this form 10A, 10EB requires a declaration as to whether the trust deed contains clause that the trust is irrevocable. So essentially they want like a clause in the question is, do you have a clause in your trust deed which says that your trust is irrevocable? Money can't go back to the settlor really. A lot of people did not have this clause, but they've still gone ahead and said yes here. They're like, no लिखना नहीं है, because no लिखेंगे तो कहीं भी scrutiny में आ जाएगा. So सबने जाके yes लिख दिया वहाँ. Now there is actually no such clause in their trust deed. So they have really given incorrect information. Now जब भी 5 साल के बाद when your matter again comes up for, आपको 5 साल के बाद वापस जाना पड़ेगा CIT के पास to get registration. That time the CIT can look at your old application form and say, how have you said this is, there is a clause that the trust is irrevocable. There is no such clause. I will now cancel your registration from the date of your original application. This cancellation can be retrospective. So again, the suggestion is quite Clear? I know. See, all these forms look very simple. They are like really sometimes 15-minute job, but you can have huge, complications and consequences later. So please seek professional help. I know it is additional cost and sometimes it's a problem, but seek professional help when you're filing so that there's no defect in these forms. The other suggestion that I'll have is, sorry, Ravi, you wanted to say something?
Yeah, I just want to quickly add that please ensure that your professional is also aware and has experience with filing these forms. Like we have seen so many examples where, especially in smaller cities or tier 2 cities, आप अपने चार्टर्ड अकाउंटेंट के पास जाते हैं ये समझ के कि उन्हें पता होगा फॉर्म कैसे बना है, बट बहुत बार ऐसा होता है कि उन्हें नहीं पता है कि फॉर्म में किधर क्या क्लिक करना है. प्लीज मेक श्योर कि अगर आपके पास कोई रिसोर्स नहीं है, प्लीज रीच आउट टू आत्मा, प्लीज रीच आउट टू ऑर्गेनाइजेशंस that are a center for capacity building to get access to professionals जो आपकी मदद कर सके correctly. That is very important because otherwise again यही same problem है, जो आप information दे रहे हैं वो गलत होगा.
Right. The other suggestion that I had is sometimes you genuinely have a doubt कि मैं yes लिखूं, no लिखूं, क्या डालूं, कौन सा attachment करूं, कुछ समझ में नहीं आ रहा है. Take a call, take an informed call, थोड़ा सोच समझ के decide करिए. Take a call, आप yes लिखना है, yes लिख दीजिए. With your form, upload an explanatory note saying this is the basis on which I am taking this decision. The moment you also file an explanatory note, it's a good case to say this is not false or incorrect information. I have explained what I've done. So that will also help you. When you have a doubt, upload an explanatory note with your form. If there's no provision, sometimes there's no provision to upload anything with the form. In that kind of a scenario, send an email or send a courier to your jurisdictional AO. The name of your jurisdictional AO will be mentioned in your online profile. Okay. The next ground is utilization of income for the benefit of any religious community or caste. So under this ground, there is a specified violation. If number one, the entity is for charitable purpose. This ground applies only to charitable entities, not to religious entities. The entity was established after 1st of April 61, and it has used its income for the benefit of any particular religious community or caste. I think the first point I will have is that this is not only minority community, it also applies to majority community as held by Patna Tribunal also. So any religious community, whether minority or majority. The example that we can think of is, suppose as a part of your charitable object, you want to say construct houses or dwelling place for a disadvantaged section of society. For the allotment of these houses, you give preference to a particular caste or a particular community. This ground can get attracted in this kind of a scenario where you are really allotting it based on what religion they belong to or what community they belong to or what caste they belong to. So that's the example that we could think of. Sometimes also scholarship is given by an education institute to a particular community. Larger scholarship is given. Admission is restricted or given preference to in certain education institutions. They can have this problem. They can have this exposure under this ground. Okay, the next, just like the objects clause that we discussed, there is no minimum threshold. Really, even if you give 1,000 rupees to anybody because they belong to a particular community, this ground can get attracted. Another interesting thing is there is a section 13 in the Act. This section has very similarly worded as this particular ground. Section 13 also has very similarly worded provision. In section 13, they have a specific exception to say that if the trust is for the benefit of scheduled caste, backward classes, scheduled tribes, women and children, then it will not be regarded as benefit to religious community or caste. That's how they have worded it in section 13. Somehow, this exception is not there under this cancellation provision. Now, have they done it consciously or is it a mistake? Do we have to read into it? There is no clarity as of today. But this exception today is not there in this cancellation provision. We'll have to wait and see how a court interprets, or if the government wants to kind of amend it quickly and get some clarification there. But as of today, these exceptions are not there. So even if you were to benefit a scheduled caste, they can still invoke this cancellation provision, the way the provision stands today. The suggestion that we'll have here is that please ensure that the criteria for helping somebody is not on account of them belonging to a particular community. It should be a more, I would say, quality based, in the sense, like, let it be people below a certain family income. Let it be something from a particular area, backward area. Let it, don't make it because they belong to a particular community or caste, because then you risk this ground being invoked. All right. The next ground is, we've not covered this in detail. This is a more rare ground, frankly. It says utilization of income towards private religious purposes, which does not inure to the benefit of the public. Inure means made available, really. So this actually goes back to one of the basic principles of charity law, which is it's only a public trust. So basically a trust which benefits, charitable or religious, which benefits the public or a large section of the public. Only such trust is entitled to be registered under 12AB and is entitled to the exemption under 11. So if you are a trust which is benefiting private individuals or identifiable people, then you are not entitled to be registered under 12AB. So this ground is more framed for this kind of a situation. So the example that we've taken here is, suppose you are a religious trust owning a temple, you go and get a 12AB registration, you want exemption on your donation income and things like that. But you actually restrict your entry to the temple to family members of the settlor or the donors, and not to the general public. So in this kind of a scenario, they may invoke this ground and cancel your registration. All right, last slide, guys, everybody. Okay, these are general points which are applicable to all the grounds, hence we've taken it at the end. The first point to remember is that the list we discussed, all the grounds, 9 grounds that we mentioned, are exhaustive. The tax department cannot go beyond these 9 grounds to cancel your registration. For example, they can't say, oh, you have crossed that 20% threshold under proviso to 215, we'll cancel your registration. No. They can't say, you've given benefit to an interested party under section 13, we'll cancel your registration. No. You invested in impermissible modes, not allowed under section 11.5, we'll cancel. It has to be one of these 9 grounds. That's the first important point. The list is exhaustive. Second point to remember is the cancellation is retrospective. This is quite serious again. So in financial year 29-30, the CIT notices a violation that you would have done, say you spent outside your objects, in financial year 23-24. The cancellation will be with effect from financial year 23-24 for all the years between 23-24 and 29-30, even if you have not violated anything in these years. So the cancellation is retrospective from the year of your violation for all the years subsequent thereto. This is very clear again from the language that they've used. So if you have claimed the benefit of section 11, exemption under 11, they will try and reassess that income and tax you for those years. The last point is another interpretational issue is, suppose, as I discussed, okay, the charity, there is a gray activity. I don't know whether it's covered within my objects. I have some doubts. So I go to an expert. The expert gives an opinion. Yes, you are covered by the objects. Based on that, I go ahead and do the activity. The matter goes for litigation. Tax department says, no, it's not covered by the object. Matter goes for litigation. A high court going ahead somewhere says, no, this is not covered by your object. Now, expert's opinion is considered to be a reasonable cause for not levying penalty normally under normal general law. It's called reasonable cause. I had a reasonable cause to violate the provision, really. Now, the old cancellation provision, 12AA 3 and 4, they had an express exception saying that if the charity has reasonable cause for the violation, then the CIT cannot cancel the registration. They had an express proviso to that effect. Somehow this proviso is absent in the new provision. Does that mean even when I have a reasonable cause for the violation, I have relied on an expert's opinion, they can cancel my registration? Does that mean that? That question is debatable today. In my view, this requirement is implicit because the CIT is required to be satisfied that there is a violation. I think satisfaction also requires them to see whether there is any reasonable cause or no. But this is definitely litigative. That express provision is not there. All right. Okay. I'd like to thank my mentor, Mr. Rajesh Kadakia. Whatever little law I know, it's because of him. Also, my colleague and friend Aarti, I think she's on the call. Thanks, Aarti. All right, thank you. We can take up the questions. What we have done is we have listed all the specified violations together at the end of the PPT. So you can just have, like keep this saved so you have all of them together. Right.
Great. Thank you, everybody. I think you guys already have posted a lot of questions. Aditya, there's a document that Vaishali and Aishwarya have created and shared with us.
Yeah.
I think you can start reading from that and answering questions. Vaishali, do you want to tell us the questions you might have
Sure, I
already
can do that. I can do
Yeah.
that. Some of them have been answered, and more questions are coming in. Another thing I would request is, I know we have only 15 minutes left in the webinar, and I know sab kuch cover nahi ho payega. What we can do is, if I can request Aditya and Ravi to answer some of the questions in the document, we'll share it with everyone via email. Yes. Later after the webinar, whatever doesn't get covered now. I can start with, there were some questions related to objects, right? So I'll just club all of those together and ask. There are a few people who've asked questions related to change in objects. What is if they want to go for object change in 12A registration, what will happen? And if you modify or add scope of activities in MOA, would the existing 12A be also get cancelled?
Okay, I think the first answer to that question is, if you want to amend your objects, first of all, you need to go to, if you are a Section 8 company, you have to go to the ROC, your Registrar of Companies, get it changed there. If you're a trust, you have to go to the Charity Commissioner and get it changed there. That's first. The moment you change, the Income Tax Act requires you to apply again to the CIT within 30 days of such change. So the moment your ROC says, okay, this change is now approved, go within 30 days, you have to apply to the commissioner. He will do a scrutiny again. And he will do a detailed scrutiny and then give you a 5 years registration. What was the second part, Vaishali?
Yeah, this does mean that your 12A will be reassessed. Just like the provision that exists, right now, that when you reapply, they have the power to go through your documents, call for information in the same way to check whether these objects are charitable and the activities that you've been doing. So yes, it is a procedure that requires some effort and time.
And one additional risk that you should always remember is that, say you were doing activity A under your old trust deed. Now you have doubt about that activity A, so you've amended your object and gone and gotten a registration with the new object. The CIT can question saying, was this activity A really covered by your trust deed earlier? Why have you come to me right now? So he can really doubt your past also. So be careful as to how you amend. Let it be a more wholesale change is what I would suggest. Don't let it kind of become clear that because this activity was not covered earlier, Now I'm amending. Otherwise, you'll risk your past. I hope I made it clear.
I think related to objects and names, I think there were a few more questions, but they got answered in the chat box itself with respect to the procedure, etc. I'll just quickly also take up one more thing that's come up, which is if an organization, which again related to cancellation. Okay, I'll club everything. So one is if an org gets tax cancellation, can they get new registration and new PAN to get 12AB and 80?
No, I think we've already answered this in the consequences, that the way the provision, the language is today, the moment they cancel your registration, you may not get a re-registration. If you've been in existence and you claim Section 11 benefit in the past.
And if you do a new, okay, got it.
If you do a new entity,
That
that's a different thing. Then you're a new entity.
Then you're a new entity itself. Got it. Another question is related to, I'll just read this out. It's from Abhishek Chivu. If me and NGO is associated with the service provider and bringing the beneficiaries in touch with the service provided for a certain benefits, making MOUs between them, if the charges charged by the service provider to our beneficiaries having profit margin in nature, is this incidental?
Sorry, it's a factual question. I don't think we can answer a factual question right now because we'll have to look at the whole facts, Vaishali,
Yeah.
Happy to look at it later, but you'll have to, it's not that straightforward,
Fair enough. Two more questions are there, which I think will be, general for everyone. If my family member gave money to me and I donated from my account to my NGO where I work, will that be a reason too? And adding to this, often it happens that employees also give money to the NGO where they work. So can this attract grounds for cancellation?
I think, Aditya, this question was asked when we were talking about the genuineness of activity and we were talking about bogus donation.
Yeah.
So let me quickly answer and then Aditya can come in. This we have seen often happens when people don't have FCRA. What they will generally do is they will have somebody from outside the country who is not an Indian citizen donate to them or sort of transfer the money to them and they would in turn transfer donation. So this is definitely, at least for me, a violation if these transactions are connected and it can lead to a lot of things like money laundering, like hawala, a lot of different complications. So yes, there is a risk, especially when something like this is connected to FCRA and you are trying to do this. Aditya, you can say
I
what you want.
agree. You're not just risking the genuineness here, you are risking, as he said, TMLA also, you're risking FCRA also, so it can be a problem.
Got it. Another question is from Amrita. Can you please give examples of defective or incomplete information given in Form 10AB, which can be grounds for cancellation?
So this is something as simple as, like Aditya mentioned, just putting a tick mark for some information where the answer was yes instead of no, right? Or, let's say trustee information where, instead of their, like you put in the wrong list of trustees or incomplete list of trustees. You have four, but you put in details of only three or, something like that. Even that will amount to incomplete or misleading information. Or, another example there was, do you have a registration which was rejected in the past? We have seen that sometimes the income tax officer has in the previous years when you had applied for the 12A first rejected it for some reason and then when you reapplied you got it. So you have to say yes to those things. It can't just be ki acha no likhna hai because it looks good on the form and we will not have questions. It has to be a very fact based exercise that needs to be done.
Got it. I just want to tell everyone that there are several more generic questions as well that are coming up, and we may not be able to cover all of them right now. So just also just checking, there is one on exit tax as well from Wrinkle. Exit tax will be levied from 14 days of IT-80 order. What would be the timeline to apply? Oh, sorry, Ravi's already answered that, that it's within 60 days of cancellation order. And then Jashwant has asked a follow-up question. Can it still levy exit tax if appeal is filed before 14 days?
No, you're saying the appeal from the IT-80 to High Court. Sorry.
No, Aditya, I think the question is from cancellation order to IT-80, that is within 60 days, right? That is when you will file the appeal.
Correct.
And the follow-up question
And
is,
then within 50 days, IT-80. Yeah.
and will they still apply that exit tax? Will they still levy the exit tax if the appeal is filed before 14 days? That's another question.
No, I think what the gentleman is asking is that suppose the IT-80 confirms the cancellation order and you are really required to pay the exit tax in 14 days. But if you go ahead and file an appeal against the IT-80 order within 14 days to High Court, then what happens? The law is silent on it. I would suggest if you're going ahead and filing a High Court, maybe an appeal or a writ, please go and get a stay on the IT-80 order. Think that the IT-80 order is not applicable, is stayed for the time being. That's the only reason, because I think the law is silent. This is my recollection. We can have a look at it again, but the law is silent on that.
Okay. I'd just like to also open up and check if anyone wants to ask any other question. We do have about 7 minutes, and we'll be sharing everything on email. Okay, so don't worry. For everyone asking about the PPT and the webinar and the resources. There are other questions, but they're more generic, and there are a lot of FCRA related questions. So should we take them up?
Will be a little difficult to answer everything, I think, right now. We'll be happy to respond over email, Vaishali, If we can stick to the cancellation bit right now, it might, because
Sure.
we've just gone through it, right? So.
Got it. There's one more that's just come in. Can a loan taken by a Section 8 company based on collaterals or personal FDs provided by the founders be a cause for cancellation of IT exemption?
On its own, no. We have to look at the overall facts. Why has this been done? Really, just purely this fact is not a ground for cancellation. Right, Ravi, you have anything else?
Yeah, I see that Ravi has
Yeah, I
responded.
agree. I respond to chat
Yeah.
itself saying it's very fact-based and we will have to evaluate it. Another question, Aditya, was, what percentage of object clause can we change? So I believe there's no prescribed limit, right? You could probably look at adding as much as you want, or there is no real.
Correct.
Many questions are being answered by Ravi. Thank you so much in the chat. So do keep looking at that. I'll just like to ask anyone if there's any questions related to the cancellation or anything that you want repeated. I know that Sonuji had also asked to explain the retrospective application. Maybe you can just go over that again if there are no more questions.
Aditya, if you can just go to the retrospective वाला slide. सोनू जी what this means, इसका मतलब ये है कि जिस साल में आपका रीअसेसमेंट में उन्हें लगेगा कि ये आपका ग्राउंड है जो वायलेट हुआ है, वो उस साल से लेके आपका वो उतना कैंसिलेशन कर सकते हैं। तो समझो अभी हम 23-24 में है, समझो 5 साल बाद उन्हें पता चलता है कि आपने ये साल में कुछ वायलेशन किया था, तो सारे 5 साल का आज
वो
से लेके
डिसअलाउ हो जाएगा।
आगे के 5 वो डिसअलाउ नहीं, कैंसिलेशन हो जाएगा, उस पे एग्जिट टैक्स लग सकता है और
नहीं, डिसअलाउ भी हो जाएगा। आप सही बोल रहे हो। आपने 11 का बेनिफिट लिया होगा ना, तभी आपने बोला होगा कि मुझे तो एग्जेम्पशन है 11 में, तो ये 5 साल में आपने तो लिया होगा, तो वो भी वो लोग रीअसेस करके आपको टैक्स करेंगे वो 5 साल के लिए।
श्योर, ओके,
हाँ।
थैंक्स।
एंड आदित्य, ये सब कुछ एक ही ऑर्डर में नहीं होगा, राइट? पहले आपका कैंसिलेशन 1 साल का आएगा, देन वो उसे इंडिविजुअली रीअसेस करके फिर आगे आगे प्रोसीडिंग्स होगा, करेक्ट आदित्य? ये पूरा एक ही साथ नहीं आएगा। सो अगर आप समझ रहे हैं कि अच्छा कैंसिलेशन आया और वो एक ही साल का आया है और हम बच गए, ऐसा नहीं है। वो धीरे धीरे करके एग्जिट टैक्स का अलग ऑर्डर आएगा, दूसरे सालों का अलग ऑर्डर आएगा, ऐसे अलग अलग करके आएगा ये सब।
Sure, sure. Thank you.
There's one more question that's coming in about the missing form in 10A. What can be done to inform the CIT about this information if it was, something went wrong? And
So you have given some kind of an incorrect information. That's the question, right?
Yeah.
Okay. Yeah, I think you should at least send an email to your assessing officer. Don't directly write to CIT. Send an email to your assessing officer saying this is what we've disclosed, but the reality is this, and what was the basis. That's it. Just write to your assessing officer. Legally, you should do that.
Got it. There's one more question on how will the exit tax be calculated, if I'm not mistaken, based on the market value?
Yes,
And I
correct.
think it's
So
mentioned in the, yeah.
on the date of your cancellation order, whatever assets do you have in your balance sheet on the date of your cancellation order, the market value of these assets. You'll also get the liabilities are subtracted, but you generally don't have too many liabilities. So it's the market value of assets as on the date of cancellation.
There is one more question on Section 11 of the IT Act. But again, it's a bit more generic question. Can you kindly elaborate on how 15% of excess of income is calculated under Section 11 of the IT Act over a period of 5 years? Is that something we can't take it up right now? That's
Sorry, I didn't
No, we
catch
can't.
the question.
okay. No.
We can't take it up right now. Actually, it requires another session in
Got
itself.
it. I just wanted to confirm, I didn't want to, because
Right.
yes, clearly I'm also far from an expert in this.
No,
So
that's fine.
yes.
I think one last question can be taken up. This is
Yeah.
on the statute of limitations or the limitations for the assessment period. How far back can they go and do this?
So really, they can go back 3 years if your tax effect is less than 50 lakhs. No, sorry, 1 second. So if it's less than 3 years, there is no limit. Even if they've lost 1 rupee of tax, they can do for 3 years. They can do beyond 3 years also, and up to 10 years, if the tax effect is more than 50 lakhs. So really up to 10 years.
Great. I think this was a very, very, very informative session. And thank you so much once again, Aditya and Ravi. If there is a feedback form, please do fill it out. And you can also ask us more questions in that. And Aditya and Ravi, I will forward all of that to you after collating it. And any other resources that we have, Ravi, very kindly, this is the second webinar with us. So I will be sharing the ones he's done previously. The blog is very active and updated. And their email IDs are also there in the form, so you can reach out to them. And as and when they can, they will respond. So yes, thank you so much, and have a great day, everyone.
Thanks, Vaishali. This was fun.
Thank you.
Thank you.
Thank you, everybody.
Thank you.
Thank you. Thank you.